All right. We are recording. All right, let's get started. It is again Tuesday, December 23rd, 2025. End of the year is fast approaching. Only a couple more trading sessions left in the year. Things are going well. Uh, Expected this end of the day, end of the year Santa rally a bit to happen. There's some really nice setups out there. I think we should just get into them and start taking a quick look at the different setups that are out there. So let's look at the markets and some trade ideas. In fact, let me make sure I've got something here. And we'll take a few notes, and then we can take a look at answering any questions that you guys may have. There wasn't a lot of questions, but there's a handful here. So let's get into this and get started. All right, let me share. All right, and I'll get off video. All right. All right, hope you can all hear me well. Let's get into it, and let's actually start with the ESE mini futures. Things are up. We've had a couple great days. We had this nice consolidation zone that I drew up here. This nice value area that we've just been bouncing around in, and then finally yesterday broke it. Although we've broken it to the up and down side, but could never stay outside of that area until today. So we broke out yesterday. Another up move today. Bollinger Bands are tight. They're opening a little bit up here. We'll see if this really acts as a bit of resistance. We also have the all-time highs just ahead of us here, so we could be very close to hitting these all-time uh, highs. So the yes, the Don Kaufman volatility box. Anyway, I'm trying to avoid anything with Don anymore. All right, just too negative, man. That guy is just the most negative human on trading. I don't know how you can be that negative all the time. Anyway, markets are breaking out to the upside. Things look bullish here. I mean, right? You've got the 8 above the 21, the stock above the 21. You've got RSI rising to 62. You got MACD rising. The only thing that's and then you've got a bullish PSAR triggered yesterday, and we've got a long way down before we could trigger a bearish PSAR. So things look pretty good. Even a pullback here would not be the worst thing, but I still think we're going to uh, rally into the year end. All right, so uh, we've got another trading day. This we've got tomorrow, we've got Friday, we got next week. So we still have several trading days left. The squeeze, entering a squeeze here and the momentum coming down, that's a little interesting to see it continuing to drop here, but you're entering a squeeze, two red dots. That could set up again another rally to the highs. If you believe Tom Lee, we could still hit, 7,200 or so. I think that would be extraordinary, but that's really only 200 points away. So I think there's a really good chance that actually could happen if we break through here. At least 7,100, I think is pretty realistic on this. That's not that many points away. All right, so there we are. Yeah, so we're bullish. I think a 112 here is not a bad trade. We are getting a little bit ahead of ourselves, but I think you break here, we could run higher. A 112 on a pullback would be the best move. Igor posted that a couple days ago that no one likes to enter trades, uh, apparently on pullbacks, which is where we actually like to enter trades. But we are up here overall, and I still think a 112 would be a good idea. That being said, I don't see too many other setups. It's not really strangle worthy in here. So a 112 on ES is fine. I would have loved, we just closed our 120-day 6 Delta campaign. So uh, that means it's time to put on another one. I would love to have a pullback to do that. I'll usually wait a day or two, but timing the market's never the best thing. If we had entered yesterday, we'd be up even more today. So again, you can't try to time the market. You have to trade, make the trade, and then use your management. Scott saying, get nervous making trades at these highs. Well, we're not. We're every all-time high or new high that we make is based after hitting a previous all-time high. So if you'd entered on a previous all-time high, like back here in October, yeah, you'd have had a little dip on a day or two, and then within 2 weeks, you'd have been right back up and higher. Okay, if we'd have entered here, we'll see. Do we hit a new recent high? But look at all of these previous all-time highs that we keep hitting. Every time you hit one on the pullback, we go and hit another one. And so it's best, I think, to wait for the pullback, but I still think we're going to go higher into the year. Anyway, a 112, not a bad setup. All right, let's take a quick look at oil. So taking a look at oil here, we remain in the gigantic downtrending descending triangle. We did take out the lows of 20. In fact, we got to go back here. Okay. We haven't been this low since January of 2021, right? We took out the previous lows that were set back here in April. Only briefly did we take those out, but we still took those out. The giant downtrend continues. So this is the mother of all trend lines here on oil. We're heading right back up to that trend line. Okay? And every time we've hit it, we have failed to get through it. It's also where the 50-day moving average lives, right in that spot. This being said, I did not want to trade oil all last week. It was a no-go for me. However, after bouncing off of kind of this support level that dates back to here, okay, I still think we're going to come back down to it. But you got squeeze reversing, MACD reversing, RSI is back right to 50 on this. We are about to trigger a bullish PSAR. So the PSAR signal is right here. We could have triggered it today. We were right there and we didn't, but we're sitting right at the 21. We're close to the 50. I think now we're back in strangle territory. So I would really be looking at an oil strangle here. All right, so that being said, yeah, ZK opened his naked put yesterday. Yep, that was the move. I should have done it, didn't do it, and now I'm 15 points behind. But I do like oil here for a strangle. Don't necessarily love it for like a 112. That would be something better at these lows down here or on a pullback of this move, because I still think oil is going lower, right? Unless we just keep seizing more oil tankers, then that'll keep pushing prices higher. But there's an oversupply, a glut of oil, and demand is not where it should be. But the economy is still cooking along, so that's all good to see. All right, gold continues to just rocket its way higher. Gold is a buy the dip opportunity. There's no dip in here for me. Gold is just a no trade in here. If you're in it, we're in it. We've got a 112 trade, or I'm sorry, 111 in it. It's up 80%. I'm just going to let that thing cook for a little bit more. I'm not going to get a whole lot more out of it, but maybe, so is it really worth holding on to for another $100? It is, until I get a better trade idea. If I get a better trade, then I will certainly, I'll certainly look to maybe unwind that gold trade. We do have a gold strangle. I put that on quite a ways ago, 33 days ago. It's right now down a bit as gold has made a pretty good upside move. However, it's nowhere near in trouble. So I'm going to leave that go. And gold sitting up here, it's above the Bollinger Band. I don't have the 3 ATR on here, but I can't imagine that we're far off of that either. So and look how overextended it is. This is about as overextended as it was back here during these runs, but look at the runs that we had. So gold being overextended doesn't really mean anything. I think every time it pulls back to this 8 or even the 21, it's an opportunity, and you will get more opportunities for gold on the pullback. I think it continues to run higher. All right, so it's a no trade for me. And then lastly, of the core four that I like to trade, let's take a look at bonds. Bonds have been in this descending channel for a while here. I think, It's nothing that I'm jumping into right now. This might be a little bit of a consolidation area here. I do think we will chill out on these. I don't try to grab every move on these areas, but you can poke up, you can poke down, up and down a little bit. For the most part, we've been in this range now for a couple weeks. You've got one yellow bar on the squeeze. I'd like to see two to give me some confirmation of a potential reversal opportunity. MACD has already reversed off the lows here. RSI is just kind of hanging sideways. So it's not a bad strangle opportunity. I don't think I would want to do much else with it. Now, we are in a strangle. That strangle's up 7% in 5 days. It's doing just fine. So it would make no sense for me to put a new strangle on. But if you're not in one, I don't think this is a bad spot on bonds to consider a strangle. I like to see RSI between 40 and 60. We're at 41, and things are a little bit bullishy. Nice word. Here, even though it's consolidating, some of the underlying technicals might be showing that we're slowing down. I don't think rates are going to continue to just rocket higher. And of course, yes, it's always fine to use TLT here. So you can continue to, if we look at, again, you can draw almost all the same things on TLT, okay, that we have on ZB for the most part. But TLT is a little bit less of a setup here. It's still, but look, remember we talked about the squeeze and what the average days in a squeeze is 8, right? 8 bars. We're 8 bars into a squeeze. 1, 2, 3, 4, 5, 6, 7, 8. Technically 9, 10, 11, 12, 13. I mean, we're really heavy long into this. I think that bodes well for bonds being at lows, or at least TLT. We are long into the squeeze and starting to get the reversal on the futures. I think this is not a bad spot to potentially be selling naked puts either. So I'm going to call them naked puts and a strangle on this, that if we get any sort of a reversal here, maybe wait a day and see what happens. Now, and Igor also posted that the markets do close at 1 o'clock tomorrow. Just remember that. I think Friday is a full day. So 1 o'clock tomorrow, 1 o'clock next Wednesday as well. And I believe both Fridays are full days. So you still have, and futures are going to continue to trade as well. So I think if you wanted to jump into bonds here and with a naked put, let's see what happens tomorrow. If you want to do a strangle, I think you could do that. I think if we get one, a little bit of an uptick, pretty much a doji, today, you can see what happens. All right, that's plenty of time on the core 4. So you've got 112s on ES, you've got strangles on oil. Gold to me is a no trade here. I wouldn't, there's other things to do, so you don't need to trade everything all of the time. Just put the probabilities in your court and see what you want to do. If you want to, time merchant put on a Jade Lizard here, up to you. You do you, whatever makes sense to your trade plan. But I think there's some good opportunities out there. Let's get into stocks and I hate stocks, but we're going to do them anyway. This break on Amazon looks good. Okay. Look at this thing. Just the 8 is curling up, the 21's curling up, the 100, the 50, they're all here, and we knocked them all out in 2 days. Okay. Breaking this downtrend line, pretty much this symmetrical triangle. Let's take this off, a little confusing here. In fact, this long anchored VWAP has been support numerous times on here, but this looks pretty nice as a trigger to go. Squeeze, not doing anything right now, but MACD, I don't know why we get so flat in here. It's because I flatten these so much. Well, look at RSI breaking above 50 and rising. We almost triggered a bullish PSAR today. Tomorrow, if we break, probably, continuing this out, if tomorrow we break like 231 or so, tomorrow or Friday, that would flip PSAR to bullish. But I think you've got RSI, check. You've got above the 8, check, or above the 21, check. Bullish PSR, not yet, but any day. And then you've got the 8 rising here. It's not above the 21 yet, but it's pretty doggone close. It's a pretty neutral setup, but I think if you get another update or so, I think this is an entry on Amazon. So Amazon's probably one of my favorite setups in here right now. Right, so I like Amazon for a bullish setup. Uh, I did an Amazon strangle already, so I put that on yesterday. It's absolutely flat today, so it's not up or down. Despite the market, or despite Amazon being up, uh, I don't think it's a bad strangle setup. I also think it's a very bullish potential setup in here. You could potentially be buying calls. You could be looking at other types of trades. I looked at a 112, does not set up at all on Amazon. Strikes are too wide on it, but you could look at something here. And I think if you wanted to actually consider like an income poor man covered call or something, I don't think this is a bad spot to enter Amazon. Okay. It's been very flat and sideways. It has not participated at all. And I think it's one of the greatest companies on planet Earth. And look at this thing. It is at the same price that it was back in July. It's gone essentially nowhere now in 6 months, basically, 5 to 6 months. Uh, I think that's not a bad spot. It's also not a bad spot because the trend is typically up. You're buying this on a pullback. I like this as a leap here. And if I look at my scanner, this is my income poor man covered call screener. So this tells me what the best setups are on income poor man covered calls. And I sorted this earlier today by RSI, being that coin being the lowest RSI, and then Broadcom here being number 2. So I like Broadcom in here. It looks pretty good. Hood struggling a bit. Vertiv still looks okay. And then you got NVIDIA, Shop, Palantir, App. So there's a handful of income poor man covered calls there. And if we take a look also at just leaps. Okay, so here's leaps, and I'll sort these by RSI, but Netflix, Coin, Broadcom, a lot of the same stocks, but it's a little different. You can see Amazon's on this as a leap screen, but it is not an income poor man covered call screen. Why? Because the revenue growth isn't strong enough on Amazon. It's a little too established of a company. Doesn't have the dynamic revenue growth. Earnings per share growth, phenomenal. Return on equity, phenomenal. 32 PE, it's not terrible. It's high, but it's not terrible. It's just the revenue growth is only 11%, which doesn't qualify it as strong enough growth for me. I want 20% growth for an income poor man covered call. So that gives it a little bit more volatility and juice. But again, these stocks are all real good leap options for me. Let's keep moving. We said NVIDIA, very similar looking chart, right? So a pretty similar looking chart, except today we did flip PSAR to bullish. Okay, so it took it out today. We're above the 8 or above the 21. The 8's not above the 21 yet, but it's going to get there. Okay, and then so you've got 3 of the 4 things I'm looking at bullish here. So I do like NVIDIA for a bullish trade as well. And I think that's also setting up to give you a decent move. Look at NVIDIA again, it's still the same price as it was back in August, almost even July of this year. So NVIDIA's gone absolutely nowhere either. I think when you have Amazon and NVIDIA that have really consolidated and done nothing, in fact, let's do one more thing here. Let's take a look at the daily, weekly charts. And let's also look at them and see what the weeklies look like. All right, so you can see here, the break, but look at these weekly charts on it. We're really the same price that we were back here, which is December of 24. but the weekly chart, okay, is looking pretty doggone good. Okay. We're in a bearish PSAR still, and we have a long way to go. So we won't flip that anytime soon. But good RSI, eight's above the 21, stocks above the 21 and the 8 here, bouncing off of this anchored VWAP consistently. I think this is not a bad spot for Amazon or for Nvidia. Look, they've gone up and then just trended sideways uh, for quite a while. Let's get rid of these things um, on it. I just have not really accessed these charts in quite some time here to look at the weekly setups, but I like it. So I like Nvidia, Tesla. Don't like it as much. Why? Let's stick with the daily weekly for a little bit here, and because we get the same basic setups, we just don't have the squeeze, which is fine. It's not critical. It doesn't really play a part in what I'm doing anyway. The weekly, this 8's getting farther from the 21. The stock's getting farther from the 21. Tesla's getting overextended. It's maybe consolidating a bit here. If you're, day trading, swing trading, look at those things. Okay, this is actually a pretty good little, ascending triangle here that if we break through this 491-ish level or so, this thing could potentially take off. It's just getting overextended. Even though RSI is only at 63, look, we're at highs on Tesla, but the RSI is nowhere near, this previous high. And if it gets to a new high here, okay, that's a bit of a divergence on RSI. I'd be a little cautious of Tesla here. I love the company. I love Elon and what he does. Okay, I think the incentive package is really bullish for Tesla. I just don't see the need to jump in at these levels here. We're not at the top of the Bollinger Band, but we're pretty lofty on this thing. And you can see the previous, ascending triangle here on the weekly resulted in a monstrous 150-point gain. And so the triangles, to me, they work, and they're the best setups out there. Okay? You may have even considered this. Okay? Your ascending triangle breakout on the weekly. So we could still have a lot more to go. So it's really up to you. I would just wait for a pullback. That's just me. All right, let's keep going. I don't want to spend too much time on any one thing. Meta in here. We've got a gap to fill. Okay. So we got a long way to go, to fill this gap. But things look pretty constructive here. Nice moves on the weekly. The weekly looks really nice. 3 weeks ago, we triggered a bullish PSAR. That's bullish. Okay. Let's actually slide in. RSI is about to break 50. It's been rising. MACD's already been reversing and moving. So this was a great level here if you got in. Obviously, we are a little behind that curve, but we're getting very close to the 21 EMA and the anchored VWAP from here. I think you've got to break this level right in here, right around the top of the Bollinger Band. We're heading to resistance. If we can break that, I think this thing goes. And if you're looking as well, this is a bit of a cup and handle, right? So that gives you a cup and handle with a gap to fill above. I think those things are really setting up pretty nicely on Meta. Even though it's rebounded, I don't think the run is over on Meta. I think this thing can run on this chart too. RSI of 50 and rising. Okay. 8 above the 21, stock above the 21. Okay, the only thing is the bearish PSAR here. Everything else is bullish. So to me, this is a go on Meta. So I like Meta in here for a variety of things. But Leaps, okay, Meta's not didn't make my list because it doesn't have the same growth. Okay, let's take a quick look at why. Okay, so why not Meta? Okay, because when you look at Meta, okay, the earnings per share growth only 6%. Okay, which is pretty paltry compared to most of these other ones. Revenue growth was fine. EPS growth, not great. Return on equity, great. So it's up to you. But when I'm looking at a leap, okay, or an income poor man covered call, okay, you've got to hit my criteria. Doesn't mean I wouldn't do it. Uh, it's totally your call. You decide what you want to do. But for me, uh, I've been pretty good with those. I don't think this is a bad leap though. In here, even though it doesn't hit my earnings growth uh, targets. All right, quickly. Apple, nice pullback. Everything looks bearish on Apple. RSI below 50, 8 below the 21, stock below the 21, falling. Bearish PSAR. Don't like Apple. Okay, Google, I do like. One thing, I gotta remember where everything is here. Hang on. Not the fibs. Why am I missing? Why am I missing the regression channel? Oh, geez, I gotta get rid of these things anyway. Made too many notes. Missing my regression channel here. I had it. Sorry, I'm gonna get rid of these dots. They'll drive me nuts. Why did I not see it? I know it's not called regression channel, it's just called channel, but still. Okay. Sorry, took me a minute to remember where it was. All right, so take a look at this on Google. So this is a bit of if you're looking at the weekly, this is a pretty good little bull flag, right? Um, not my favorite pattern, but it's not bad. So a nice little bull flag here. I think this is interesting that we've been in this channel and now we're about to break this channel. I think Google looks pretty interesting here. Today, bullish PSAR triggered. 8 above the 21, stock above the 21, and RSI above 50 and rising. Google looks good as well. Okay, so lots of good setups in my opinion. Microsoft looks pretty decent here. Bullish PSAR, everything looks good on Microsoft. Maybe wait a little bit more to see if it breaks out of this. Uh, looks a bit like a triangle pattern, right? If you want to go back and you can make things look however you want to, right? But looks like it might be, again, breaking out of the same type of triangle pattern that everything else is doing. Palantir is not. Right, so Palantir, nice bounce off the anchored VWAP here. This was the opportunity right here at 177 on Palantir. It looks good. Okay. It's sideways trending for the most part. So it's not my favorite thing, but I love the fact that I have a 112 on it here. We're up 85% in 5 days. I think the 112 on Palantir continues to be just a trade that I would like to continue on. Everything is bullish. Okay, so everything is bullish. Any pullback here, like today, pretty much, even though it's down just a fraction, this is not a bad spot to add another 112 in Palantir. I'm not doing anything else in it. Not buying it, not leaps, not nothing, but looks decent. All right, sorry, I'm probably going long on this, but like I said, there's a lot of, I think, decent looking setups here. I wouldn't go crazy, but there's a lot of decent ones. This is not one of them. I don't like Robinhood in here, even though it's probably my favorite stock for the year. And in all of the small accounts, this is what drove the massive growth this year in the small account. It's all Robinhood driven. Okay. And we did a poor man's covered call on Robinhood. We're still doing it, still cranking out good gains, but 8 below the 21, stock below the 21, bearish PSAR and RSI below this. I don't really love it here. I'd be a little cautious about it. Now, that being said, we talked about it here as a potential inverted head and shoulders, but this right shoulder, it needs to start creeping back up into here. So we need this inverted head and shoulders, and they can be a little diagonal as well. So I'm fine with that. And you don't have to be a level neckline, okay? But it's got to break. It's going to break up here. And right now, we're not seeing that on Robinhood. So it's a no-go for me. Netflix looks like dog doo-doo. I wouldn't touch it. Broadcom, it's one of my favorites. We're in it everywhere. It's got a gap to fill down here. I don't know if we'll get it. Gaps usually do get filled at some point, but we also have a gap up here to fill them. And there's gaps all over the place. Okay, so which one's going to fill first? The one up here or the one down here? It's bearish. Everything about it is bearish, but I think this support level here around 330 has been pretty solid. Okay, it's been bounce, 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 almost a bounce, 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 bounce. Okay, now it keeps tapping on it, which is not great. Okay, but let's see how it does overall. I think it works perfectly for the income poor man covered call, and I think the entry for an income poor man covered call is not bad on that. Mags. I'll tell you here's my problem with Mags, and I traded it for most of the year in the small accounts, is the options suck on it. And it's very difficult. If you want to buy it and hold it as a leap, I don't think that's bad, but I don't like the options. They're wide and they really don't do well for a poor man covered call. You get very little return on it, and not everything in the Mag 7 is great. I mean, if you've been trading mags, well, Amazon hasn't moved all year. Nvidia hasn't moved. Okay, Tesla has. Meta is way down. Apple has moved. Google has moved. Microsoft way down. Okay, so when you look at like the Mag 7 here, it hasn't performed well because half of them are up, half of them are down, and half are sideways, right? So, so half up, half down, half sideways. In here, I just don't. It's just not going anywhere. And if you look at it, okay, it's up, okay, overall, but it also has just not done much of anything for months now. Okay, it's just struggling. I think you're better off to find the ones that I mean, if you bought it down here, everything is you're doing well on it, right? But I just didn't do as well on this run as I would have liked because it was hard to sell the calls. The underlying went up, but it just didn't work as well for me. But that's just me. I think if you're holding it, you buy on the dips and you use it as a leap trade, and it gets a good way to increase your value. I just think you're going to have ups and downs in this, a lot of yin and yang, which is what we're seeing right now. It's up right now, but I think that may continue. All right, let's rock on. It doesn't mean it's bad. I mean, it works fine. It just didn't work for a poor man's covered call for me. And again, just like SoFi here, just sideways. Okay, we've had some ups, we've had some downs. We're just sideways. But I like where SoFi is here. I think the pullback is decent. I think this gives you a really good strangle setup. We're already in one. Our strangle's up 11% in 5 days. So I think it's a perfect strangle. If we would come down here, maybe I would even take assignment on it. But I really like SoFi. It's done well, but it has been consolidating now for several months. All right, PayPal just can't get out of its own way. I think it's a good company. Okay, it just can't get going at all. I think this is a bargain, but I'm in it. I just wish it could get moving. And everything about PayPal is good, and its stock cannot get out of its own way. Boeing has been fantastic. If you're trading this one, it's off and rocking and rolling. This was the trade to be in. Beautiful ascending triangle break in here, and off it went. ARM, Good company, terrible stock right now. It's a no-go. I'm trying to get the coin cost because somebody asked about it. Coin, is this a double bottom? Potentially. Yeah, maybe. Or it's a descending triangle. Okay. And it has more to go. Bitcoin, I think, continues to struggle for a couple more weeks. I think you just hang in on Bitcoin. It'll be fine. It's going to continue to struggle, maybe dip, and then it will rally as well, which will bring coin along with it. Right? AMD also has had a pretty good pullback. This is not a bad spot. This could be an absolute double bottom. The only thing you should watch out for here is this is the H pattern, folks. And if you don't know what I'm talking about um, on it, yeah, get out. Okay, here it is. Possibly the worst pattern in stock trading, in my opinion. Descending triangle, not great. Uh, a rising wedge, not great. The H pattern, terrible. Okay, it's an awful pattern. It's showing up on the weekly and the daily. That if we bounce here, it could be a double bottom and off it goes. If we break this bottom area here, okay, somewhere in this range, whatever down here, okay, if this thing starts to break uh, here, that would be bad. It's bouncing, so we might have a double bottom in AMD, which I think is good. Other than that, this is not a good pattern if it breaks this low. Okay, so keep an eye on it. Okay. Not saying don't do anything here. It's either a double bottom and off of the race as it goes, in which case it would have to break this level, right? So it breaks this level, it's a double bottom, and it could, make a big run up to probably 250 or so. If it breaks this, it could have a significant downside to go of maybe 60 points or so to the downside. So right now, I think I would hold off. All right, and then Costco, it's just a dog, and it's getting worse. Okay, the 8's getting wider from the 21. Is as wide as it's ever been on here. So it's really accelerating to the downside. It's oversold, but there's nothing positive about Costco. So the question here, what's up with Costco? I have no idea. It just sucks. So stock right now just sucks. What I do like though, JP Morgan, I think this was the break here yesterday. It's off and running, but it's still not a bad um, entry. I think financials are going to do fantastic next year with the lower rates. And this is also a fintech company. Okay, I think AI, and I don't think people are talking about AI at JP Morgan and Goldman Sachs. If you're a cubicle worker at either JP Morgan or Goldman Sachs, your time is limited. You're about to lose your job to AI. So AI is going to take over financials here. Yeah, and probably take over. It should take over from some of the analysts out there. I see no reason. And if you're working for any of these companies, I feel bad, but I'm telling you right now that AI at JP Morgan and Goldman Sachs and probably Capital One and maybe Wells Fargo. AI is coming. It's going to clean jobs. It's going to improve earnings, lower rates, more borrowing. I think these things have a good runway into next year. It'd be a buy the dip for me. Okay. It's an opinion, so do what you want with that. And then quickly, let's just rock through some of these. Shopify just continues to look good here as it moves higher. It's bullish. I like the pullback. We've been doing 112s in shop and making money on a consistent basis. I think this is another opportunity on this pullback for shop. AppLovin is a great looking company. This is the H pattern in reverse breaking out here. I don't think this is a bad spot on AppLovin. I think it's a little bit lofty, but Not bad. Hims could be a double bottom happening. Doesn't look good. Granny shots looks good. Eight's above the 21. Stock's above the 21. About to trigger a bullish PSAR, and RSI is rising. I like Granny in here. I think it's a good buy. All right. Yeah, basically a cup and handle. It's a lot more steep than a cup and handle, though. Where were we? Who were we talking about? I don't even remember anymore. Maybe it was App 11. This is not exactly a perfect cup and handle, but I guess if you scroll out, then yes, right? Cup and handle there with the neckline up here. I think that's what you could be looking at on App 11, right? The H pattern is different. But if you scroll out a bit and see the whole picture, then I think a cup and handle with the break of this. There's a lot of TA today. So a lot of technical analysis stuff today. This is pretty interesting here. This is also, I mean, how many patterns do you want to look at in one day? But it's also a rising triangle or ascending triangle with a potential break here. I think if this thing breaks off, it runs. All right, let's keep going. Bull, not going anywhere. This thing's mirroring Bitcoin. It's going to do whatever Bitcoin's doing. Bull, I think it's a good opportunity. I think if you're longer term horizon, you're fine. My shorter term trades aren't going to turn out well unless Bitcoin starts to take off. But if you look at bull here, and then we look at Bitcoin here, it looks almost identical, right? So there's Bitcoin, there's bull. They're very, very similar. Okay, bull will do whatever Bitcoin does. Okay? And you're going to get a little bit of that with hood as well, but a little bit less extent. But bull is absolutely, yeah, it's a pain in my butt. I'm thinking of just cutting it loose, but we'll see. I sized them small, so if I have to close them for 100% loss, it is what it is. All right, and Oscar here, nice pullback. It looks a little bearish. I'm not touching it right now, but I think this is a phenomenal stock opportunity. Just wait for it to bottom. And then UNH, okay, looks great. Nice pullback here. Great consolidation. It is a bearish PSAR. Everything's bearish on it right now, but I like the opportunity. We are actually in this thing. This is the one where it's bearish, but I like where the RSI is. I like that we're close to the 21. We put the strangle on in here. This strangle's up 24% in 7 days. Okay, so all good with our strangle in United Health. And I think on every pullback, this thing is an absolute opportunity to sell naked puts. Quickly, strategy in this consolidation range. Let's get it broke out of the consolidation, or it broke out of the channel, and then now it's just consolidating in this zone. We could probably make it a fraction bigger. Okay, so you're in this zone. Okay, on strategy, it's at the bottom. Doesn't look great. It's fine for me for doing what we want it to do. And we're in it with a strangle, which is up. So we've got a winning strangle with all the way down to 110. Okay, so when we look at this thing here, my strangle's down here. Doesn't mean we can't get there. Okay, and if we do, then we close it for a loss. And then the upside on that strangle is 255, which is up here. So I'm okay with where we are. If this thing just continues to trade in this zone to slightly lower, it's fine. And then the income poor man covered call is doing great. Okay, so that thing is fine. All right, that's it. This is a lot of stuff. Are you still as bullish on UNH after Trump efforts to go after insurance companies? Yeah. Yep. In fact, I'm so bullish on UNH that I actually just bought yesterday my policy for next year with UNH. So I'm contributing to the bottom line myself. So UNH is my insurance company that I run through my personal business for my wife and I. So that's the scoop on UNH. I like the company. It's been a great insurance company for us. I think on the pullback here, I think it's going to do just fine. Okay. And I still think it rises more. I still think 400 is in the cards. Okay. All right. There's a lot of trades for you. I don't know. Let's see if there was a bunch of questions that people wanted to cover today. So let's see before we leave the screen, all the questions in Discord. There was one question, and Igor posted a little bit, but any thoughts on closing positions before the end of the year? Okay. I think that's really an individual choice. You got to, if you have a lot of capital gains out there and a couple losers on your books that like a bull or something like that, I might consider closing bull out. For me, I'm gonna weigh this until next week and see if we get any kind of additional gains on bull. If not, I might close it out just to take the loss to offset some of my capital gains this year, because we have a lot of gains, capital gains that are short term that I have to deal with, which is a good thing. To me, it's just some tax loss harvesting. It's not because uh, I'm worried about futures mark-to-market positions. I don't have that many that I'm worried that it's that big a deal for me. Okay, so don't care about that. But I think you got to decide, or do you have losses on the books, and maybe you can't carry them. You can only carry so much over if it's short-term loss. So maybe you want to book a gain against that. Okay, I would definitely talk to your accountants on that. So tax loss harvesting or tax gain harvesting. It all depends on your current position. Talk to your accountants. Decide you've got 2 weeks. Okay, you got plenty of time to do it. All right, let's keep going here. Yeah, I have some buying power, but admittedly, I'm a bit lost on whether to spend it or not. Okay, if you're not sure what to do with it, don't trade. Okay. If you don't have a specific plan for how to use your buying power, don't don't trade. Don't put a trade on. Okay. Yes, I think we rally into year end, but then we may rally even past year end. At some point, there'll be a pullback. So I think there'll be opportunities for me to get in, especially on like SPY and UNH, which is kind of the question that was just posted in chat here, I think, was as the SPY leaps approach. Yeah, because on SPY, I've got 87 days left. I've got a pretty big gain on my, on my leaps right now. Uh, I'm not going to take them off right now because I just don't want to. I don't want my cost basis here. I think a pullback after this is an opportunity. So if you're looking at SPY, okay. So if we're looking at the market here, and kind of ignore this right-hand side because this is the daily is kind of funky. But if you look at the year, I mean, we are still at pretty decently lofty levels. We can go higher, but I want to buy on dips, buy on dips, buy on dips. You get a dip, okay? You're getting a dip, once, every 4 to 5 weeks. Except for this stretch here, okay? But for the most part, you get a dip especially on the weekly when it hits the 8 day, okay? The 8 day is essentially like the 50 day on the daily almost. So when it hits that 8 day or even the 21, okay, the 21 is like the 100 day moving average. Okay? The 8 day is like the 40 day moving average. Okay? When it comes down to the 50 day here, there's been opportunities to buy SPY. This is just not one of them. So I think when it gets down here, you start to sell puts, or you can actually just get long. So I'm just being patient on it. But my thing here is to Peter, if you're not sure what to spend it on, don't spend it. you're fine. Don't get FOMO here. It's fine. You don't have to always be in the market, and especially at lofty levels. Okay. But I think if you have a plan, then you just trade the plan, okay, on it. So, yeah, I don't know, what's going to go into the year here. I think you can just be patient. To me, I don't treat the end of the year any different as the middle of the year when it comes to my plan. So I will just keep trading my plan no matter what time of year it is. Okay. So yeah, trade your plan, and the year, and change doesn't really matter. Okay. Who knows what the markets are going to do? Just trade the plan, guys. All right. Let's see if there's anything else on here. People are answering other people's questions, so I'm trying to see if there's an actual question. I think this is just a bunch of people back and forth answering other people's questions, so I guess I don't have to answer them. How do you evaluate an underlying for an income poor man covered call? Would you estimate the weekly return, especially what performance to expect? I don't know. So I shouldn't say I don't know, but let's go back and take a look here. Okay. And I don't know if I can answer this question correctly, but again, evaluating the underlying. I want what I want. Right? Doesn't mean that these are your trade ideas, but these are my trade ideas based upon 20% revenue, 20% earnings, 15% return on equity, and an RSI above 35. Okay. Which means I want something that's moving a little bit here. So I like these stocks. The question is, are any of these stocks? So there's the fundamental reasons. And then you look through to see, are any of these things at good opportunities to buy? Well, coin is, but I don't love this chart right now unless we can bounce on coin. So I'm going to hold off. I like the pullback on AVGO, so I would be in. And if you're trying to estimate what the weekly return is on this, the weekly return goal for me is 1% roughly of extrinsic on the stock value. And if you're using leaps, you're usually paying 1/3 of the stock value, which means I should be generating about 3% a week of extrinsic. Okay. So that's the goal of the account, is 3% a week worth of extrinsic value. And let me change the screen for you quickly, and let's take a look at another piece here. All right, so here is the income poor man covered call tracker. Let me move some stuff around on my screen. You can't see, but here's the results so far. So this one's not quite a year where it's 70% on SPY. And that's pretty good considering SPY and QQQ are not highly volatile underlyings, right? These are kind of boring underlyings, and they don't generate as much premium or extrinsic every week as other stocks may do, but they're still doing pretty well. This one's at 71%, 248 days. And why? Well, because QQQ is a little bit more volatile than SPY. It's a lot more tech heavy. But I do both because I want a little bit of stability in my life with these. But I do want to enter on pullbacks. But let's take a quick look. So the value of this thing is right now around 77,000, but I bought into it around 47,000. Okay, that's where I got in. And then I've recently made some changes to this. This is still a work in process. Okay, but I've started putting extrinsic in here mainly for you guys to see it, because I get it, but I want you to see it. This is the extrinsic P&L every week. So I'm showing you how much extrinsic I'm getting every week. So right now I'm averaging around $1,000 of extrinsic a week on something that's $77,000. Okay. which is 1.2% a week on SPY of extrinsic, right? So if you're averaging 1.2% a week on something like SPY, I think legitimately you can consider that, hey, in 52 weeks, I should be able to make roughly 50%, right? 52%, something like that. Okay. And again, it doesn't matter the gains or the losses on the actual uh, weekly. Okay. Hey, we lost $1,000. I made it 1,400. I made 1,300. I lost 200. Okay. I made 2,000. I made 2,000. I lost 4,000. Again, you ignore the noise, okay, of the covered calls because really this is all we care about, right? And even though we have some losses on the covered calls and we have gains here, we also have roughly in 323 days, okay, that's 46 weeks. So we have 46 weeks, okay, of $1,000 on average of extrinsic, okay? So that's where a lot of this is going to come from, okay? Don't get wrapped up in the covered calls themselves, okay? I also created a little tracker down here, okay, to track my extrinsic and my covered call premium gains by month. Okay, so we'll share this with you guys. Okay. All right. So extrinsic again is your time value. Okay. So if you're selling at the money, there's no intrinsic of the premium. So it's all time value. If you're in the money on your covered, if you're out of the money, let's say on your covered calls, there's no intrinsic value because you're above the strike, which means it's all time value that you're getting paid. So out of the money covered calls or your poor man's covered calls, okay, that's all time value that you get. Okay. At the money, it's all time value that you get. But you get a lot more at the money than you do when you sell an in the money covered call. Okay. The premium that you take in, part of that is the in the money premium, and then part of that is the time value or the extrinsic. So the in the money premium part is your intrinsic. I would be better if I was showing this on I could draw it for you better. But I just understand. The nice thing about that is if you sold only in the money calls for an income apartment covered call, to me, that's the beautiful part because you still get paid the extrinsic value. Okay, you're still going to make extrinsic value because there's always going to be time value in it. And you're also adding protection against any downside. So you get the best of both worlds when you sell in the money. You get protection and extrinsic. It's a beautiful thing. Okay, let's see how maybe that works here. All right, QQQs. Now in QQQ, I'm averaging about 500 bucks or so a week of extrinsic. This week was a short one; it's only 2 days, so I'm not too worried. If I closed this out today on QQQ, okay, just to give you some idea, right now there's $326 left. Okay, so if I closed it today, okay, I'd make 397. Okay, but that would be closing it today, which is 12/23. Okay, it's not the full 7. It's only 4 days in. So anyway, I'm going to delete that and not make it confusing. So I'm just holding out till all the extrinsic is gone as much as I can. And I want to sell when my extrinsic is really low. Look, I'm opening it for 621 of extrinsic. Okay. And I sold it when there was only 5 left. Okay. Or I bought it back when there was 5 left. I sold it with 738. I bought it back when there was only $90 left. I sold it for 330. I bought it back when there was only $15 left. I'm booking extrinsic. I wish I had tracked this all year so you could get a better sense of what this looks like. Let's move on to some other ones. So hopefully this is helpful in giving you guys some opportunities. All right, so strategy. All right, so strategy is a little bit of a struggle, but this thing's only been on for 17 days. Okay, so on 17 days, I've already booked $4,400 worth of extrinsic, right? Okay, so I booked almost 1,800, okay, then 900 and 1,000. I mean, these have not even been on for And right now, if I closed, if most of these haven't even been on for 7 full days because it's dropped a bit. But let's look at what is it right now. Right now, there's $975 worth of extrinsic remaining. If, let's just do an if. What if we close this today, 12/23? Okay. And we closed it right now for $8. Okay. We would make almost nothing on the P&L, right? Because we opened it for 807, and technically right now it's at 807. Oh no, I'm sorry, it's 325. I looked at the wrong thing. Okay, it'd be 325. Okay, yeah, we'd make $1,400 in P&L, but that doesn't matter. Okay, what matters is how much extrinsic. Well, there's 975 worth of extrinsic left in it. Okay, so again, I wouldn't close this. Okay, but I'd make $1,400. Well, that $1,400, okay, would continue to add to this overall account. So even though it's down here in the first 21 days, it's down $800. Okay, the stock's down 11, almost 12%. Okay, and I'm only down $800 right now. Okay? If I would close this out today, but I'm also going to sell more today. So it's very likely that this could actually go positive this week. Okay? And yeah, the previous monster trades, and look, 20% winner with the stock down 21%. 10% winner in 74 days with the stock down 46%. Okay? It's all because of the extrinsic value. Okay? All because I'm getting extrinsic value on it. And here I'm making, on average, let's just say it's $1,800 a week on a, well, right now it's worth $7,000. But that's almost like 25% a week of extrinsic. Okay? So at some point here in the next week or two, we'll pay this $6,000. We bought it for 13. Okay, so but the 6,000 that we're down, okay, we're already 4,400 there. I'm 2 weeks away from this being down, from the stock being down, and I'm up. In 2 weeks, I'll be up. Okay? Why? Because I'm going to continue to generate extrinsic value. Okay. Let's look at gold. Obviously, a phenomenal opportunity here on gold. We're up 270% this year. We've made 20 grand on a $7,000 investment. That's not too shabby, right? So that's pretty good. But we're still booking, look, I'm booking almost $1,500 of extrinsic each week. Yes, my upside is capped, but I don't give a hoot because all I care about is the extrinsic. I want to make $1,500, $1,600 a week. At $1,600 a week of extrinsic on $44,000, that's 3.7% a week on gold. Okay. I'm up 270%. Gold's up 33%. I think I'm doing okay. Okay. I hope this makes sense. Okay. So when the stock goes up, it's really great, which is why you want a stock that's rising versus falling. When it's falling, it's okay because you're still generating extrinsic gains every single week. Let's keep going. I know I'm going long, so I apologize. I hope this is worth it. There's more people on here, I think, than when we started, so that's good. But if you want me to stop, let me know. But let's look at Broadcom. We've only been in this for 53 days. We're up 22%. The stock on Broadcom is only up 0.6. We're up 22%. So again, it doesn't matter if the stock is up, down, or sideways. All that matters is that we're generating extrinsic value. And because Broadcom has so much juicy extrinsic premium each week, which is why you want high premium volatile stocks. Okay, this is the reason right here. Okay, well, this one's the only one that's been on for 7 days. The rest of these I've been booking in 2 or 3 days. But on average, I'm going to make around $3,000 a week of extrinsic on a $9,000 investment. It's not going to matter if this thing goes to zero. It technically probably won't. Okay. But it doesn't matter. We could go actually negative on the leaps. Okay. But if even if the leaps get down to where there's no value left in them, doesn't mean the stock went to zero. It just means the leaps went to zero. Okay. I'm going to, at some point here, I will have generated more than $9,000 of extrinsic. Once I've generated more than $9,000 of extrinsic, I don't give a rat's patootie what the stock does. Does this make sense? Yes, yes, and yes. So again, don't worry about your ups and downs each day. Like, oh man, I lost $3,000 this week. I hate Tom. I made 1,300. I love Tom. I love Tom. I love Tom making 17. I lost $5,000 this week. I hate Tom again. Okay. I lost $3,000 on my P&L. I hate Tom. Okay. It doesn't really matter if you're losing money on the P&L, then your stock is gaining in value. Okay. If you're making money on your weekly trades, okay, that means the stock is dropping. Okay. But what doesn't change is all this extrinsic. You're going to make enough extrinsic here in the next couple weeks to have paid for the entire cost of this stock. Yeah, yeah. I told you Broadcom I think is a good is a good income poor man covered call trade right now. Okay, I think this is a good one to look at. Size it properly. Okay, I think Broadcom's a good one. I don't think Hood's necessarily a bad one, but Broadcom is juicy. Hood's pretty juicy on the premiums. Hood's not a bad one either. Nvidia may not be necessarily a bad one either. You don't want stocks to go down, but you would love them to go up. If they go down, it's not going to matter as long as you're generating enough premium, which is why strategy makes, is a crappy stock, right? Strategy is a piece of junk. Okay. But because of the premium that you get each week, okay, after long enough, you're still going to be making money even on a downtrending stock. And some of you are going to say, does it even matter then what the price of the stock is when you get in? Technically, it doesn't. But why would you want to lose? Why not make value like gold? Okay. Why not make value like gold where we can make 270% on something that goes up as opposed to making 20% on strategy that goes down? Right? I mean, you're still going to make money on these trades, but why not make 120% versus making 20%? Okay. And then SoFi, last one here. Sorry, we'll try to keep this rocking and rolling for you. SoFi, what's it at? SoFi's down, right? So we're down 8% on this trade. Stock's actually flat on this trade. Stock's done nothing, right? But we're down a bit. And it's a kind of a misleading percentage because it's only been 9 days and this is only a $10,000 stock buy on SoFi. So this is not long enough to do anything here. But look at the extrinsic that I'm getting out of SoFi. Okay. Almost 1,000, almost 1,500 a week. Look at what I'm selling it for. 1,900, 1,100, 1,860. Okay. I am making somewhere in the neighborhood, if I get out of these at like 80, 90%, I'm going to make like $1,700 a week of extrinsic on an $11,000 leaps buy. Okay, do some math on that and tell me how soon will I completely break even? Okay. And even though it's down, it says down 8% today. Had I closed this today, which I would not be doing, 12.23. Okay. And if it was, what is SoFi right now? It's at 88 cents. Okay. And it's got a lot of extrinsic left. Okay. So it's got $1,290 of extrinsic left. We've booked 570 of it so far. Okay. But here's the problem. Oh, I put the wrong date in. Okay. So this is why we wouldn't close it early. I mean, why close this thing early here? because we still have 500 or still have $1,290 of extrinsic left. Okay. That being said, uh, on this, if we wait till Friday, okay, on this thing, and we close it for, let's say we close it for the same price. Let's say we close it for a loss. Let's say we close it for $1, and we're going to lose money. Okay, but we only have $100 of extrinsic left. I will make 1760. Okay, that's going to be unbelievable. That's going to take care of all of this loss up here. Okay, so again, focus on the extrinsic, which I'm starting to track for you down here. And then I've even put these little trackers in. I created this little column in here that's going to convert this to a date range. Okay, that this can then grab and tell you how much money you're making of extrinsic. Look, I've only made $172 on the covered calls, which is what 99% of you are focusing on what you're doing with the covered calls. I've made 2,500 in extrinsic. Okay. As soon as you can get this, this is just the visual representation to get this into your head that this number of extrinsic is all that matters. Okay. All right. Sorry. I think that was a lot of that. I hope this made sense for you. Okay. All right, we've been at this a long time, an hour and 15 minutes, so I apologize for going long, but I think this hopefully was helpful on it. So how far out do I go with how far out do you go with the 300 DTE leap? 300 DTE. I mean, I'm not sure, Rob, what the question is. What do you mean, how far out do I go with a 300 DTE leap? I mean, if it's 300 DTE, then I go 300 DTE. I'm not sure. 300 days. I go over a year out. And the lower the price is, the farther I go. So if the price is closer to highs, then maybe I only will go 6 months. If we're closer to the bottom of the Bollinger Band, or we're closer to an oversold RSI or something like that, then maybe I'll go a year and a half to 2 years. I think I go farther when I get a better discount, if that makes sense. Okay. But I like to go around 400 days, 350 to 400. All right, last one here, and I got to run. Dan, for you, if you're still here, let's go model a ZB strangle. Hang tight. All right, let's jump in. Let's model a ZB strangle. I typically go 90 days, which is what this one would be. I will go around 7 delta on the puts. I would go around 6 delta on the calls. Okay, so 90, just again, I follow exactly what my trade plan says, which is 7 delta, 6 delta, around 90 days, closest to 90 days. And beep, beep, beep. And there we go. Okay, so that would be the strangle that I would do on ZB, which this one's so new that I can't put a new one on for me on ZB. Okay, but if you were putting one on, or I was putting one on today, okay, can't tell you what to do. You got to work your own plan. But this is what I would do. Let me post this into the Discord. And by the way, in the Discord, under Tom's resources are Tom's trade ideas. And I do post these ideas in there. So ZB strangle, okay, I posted it there. But I do want to really consider that oil strangle here, right? Now, this one's at 49%. This one's going to come off any second now. So I could probably put a new one on. So let's go 90 days. The closest is about 84 here. I'm going to go down to about 7 delta, which is the 45. And I'm going to rock up to the 6, which is around 77. Okay, which I think both of those work for me on this. Oil's right now at 58. and looking a little bullish. I don't think it's going to 77. Okay. It could go down to 45, but I like this trade. Let's take a quick look. Bam. Okay, so here would be, you can see there's a little bit of call skew to the upside, which is unusual because oil's bearish, but you got some call skew to the upside. You're taking in 660 bucks on 1161. I think that's pretty juicy. To me, if I was doing, so I might put this on because the other one's going to come off any second now, and I like to keep these rolling. I'm probably going to do. We'll do about 2,600 bucks. Okay, a 2x loss or it's a 1.5x loss. So at $2,600, my loss on this would be around 4,000, 3,900. Okay, which is not even 1% of my account. Okay, so technically I should be going a little larger. If I wanted to get to 2% of my account, I'm not going to go that big, but we'll go a little bit bigger here and scale up. Okay, let's see. Let's see if we get filled. It already wants $1. I'll let it sit. See if they want to come to me a little bit. If not, I'm going to put this trade on as well. Let me also screenshot this one for you guys if you have an interest in an oil strangle, which I do here. Okay, I think that's good for the session today. Answered a bunch of questions, went through some things. I hope this was helpful for you. I appreciate you guys all sticking around. It's pretty good to keep over 60 some odd people in here for an hour and 20 minutes. My voice is fried. I'm not fried, but my voice is. So let's see if we get filled on this other oil strangle. That's at 49.2%. And then we'll just get into another one here. We are up on this 112 on oil, up 80%. That thing's great. ES, okay, we got a 112 here, up 61%. We got our naked puts here, doing just fine, nothing to do with those. We got gold. We got a 111 up 80%. That thing's fine. We do have a strangle that's down 1,300 bucks. Okay, so it's not anywhere where we got to worry about it, but it is down. And then we have another strangle here, already up on bonds. The Amazon strangle that we have on here right now is up a whole $9. ABGO, again, we just look at the extrinsic, $770 of extrinsic, don't do anything. Bull, both of these are losers, probably going to cut those loose at some point. But again, I got two trades. Okay, yeah, I'm going to lose $6,000, but $6,000 on a $400,000 account is only 1.5%. So again, I'm trading small on those, technically speaking. All right, gold, we have $892 of extrinsic, nothing to do there. Strategy, we've got a strangle that's up 24 bucks. And then we also have $960 of extrinsic with 2 trading days to go, or 1.5 to go. Palantir, we're sitting on a 112 trade. That thing's up 88%. We probably should just take this thing off, right? 88%. So we'll put in an order to get out of Palantir here. Not bad. We'll make it 880 bucks on that in 5 days. Not bad. 800 bucks in 5 days. Pay for some Christmas presents. All right, QQQ. We've got a naked put here that we were hoping to get assigned on, but that's not going to probably happen. Or maybe if it does, it does. Then we'll flip that into a leap. If not, we have $334 of extrinsic, nothing to do. SoFi, we've got $1,300 of extrinsic, nothing to do. Again, we don't care if it's in the money, out of the money, doesn't matter. All we care about is the extrinsic. We're typically not going to get assigned if there's extrinsic left in it. So that's all we really have to monitor. We also have a strangle of 13% in SoFi, SPY, extrinsic. There's only $100 left. That's it. It's not bad. If it gets under 100 here, we'll look to close this thing. So we're getting close to the extrinsic coming out of of the SPY piece. We sold it for 1,032. Okay, we're only at 100, so we've gotten 90% of it anyway. So we could technically consider rolling out this in the money. Are we going to lose money? Yeah, we're going to lose 1,800 bucks. Okay, we're going to have to spend money, cash, to buy this back. But I'm going to book $1,000 of extrinsic, and my underlying continues to just climb and climb and climb. So it's doing just fine here. In fact, it's up another 323 bucks or so today, 350 bucks today on those. So we might roll this, okay, if it drops under 100. Then UNH, we got a strangle that's up 21%. That's doing great. We got a naked put that's down 28 whole dollars. Nothing to do on either one of those. We're in good shape. We'll watch this strangle. I'm going to let you guys go. Hopefully, this was helpful today, and you got a bunch out of this. So have a good one. We'll probably talk to you in Discord tomorrow, but if I don't talk to you again or see you in person, have a fantastic Christmas, everybody. See you tomorrow in Discord. Well, later today, too. Bye-bye.